So last time tulifika was it finals to completed auditor. So Quinta, hatujaenda sana nasoma tu kiasi tu, so we are still at a good place. So let's continue the hii ilikuwa ni ya mwisho. So we are on what? On the final. So tumaliza hiyo final to complete an audit. So let's go to the work done. The work done during final audit. 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 So number one, updating the auditor's knowledge of the systems. Updating the auditor's knowledge of the systems. Updating the auditor's knowledge of the systems. Updating the auditor's knowledge of the system. The number two, determining whether the systems have changed. The systems have changed. The systems have okay, so let me repeat the point number two. Determining whether the systems have changed between the interim and the year end, by interviewing the client's officers, and carrying out walkthrough test. Yes, that's one of the tests performed by the auditor is a walkthrough test on the classes of transactions and the balances. So it's applied on the stages of the transaction processing, right from the initiation to the completion. So those are stages that be tested to confirm if the transactions were accurately done, if maybe they're completed in all aspects. So walkthrough test, you basically try to trace the transaction processing aside from right from the origin to the end. Number three, carrying out compliance test. Carrying out compliance test. So we have met compliance tests quite often, and we said that they are the tests performed on the system. They are normally performed on the systems. The number three, so number four, drawing conclusions on the adequacy of the accounting and internal control systems. The number five activity, carrying out substantive procedures on all assets, substantive procedures substantive procedures on all assets, liabilities, and equity elements, Sasa hiyo procedure iko na one name inaitwa verification procedures. Whenever auditors are performing the substantive procedures on the assets, liability and equity, inaitwa verification procedure. Now verification procedures inakuwa performed by the senior auditors, not the junior. The juniors, they undertake what we call the vouching procedures. Now verification applies to auditing the items in the balance sheet or the statement of financial position, while vouching applies to auditing the items in the income statement. So next, number 6, vouching transactions. Vouching transactions. The number 7, confirming balances with third parties. So one of the methods of obtaining an audit evidence is external confirmation. In that case, maybe auditors confirming the balances with the third parties upon the creditors or the debtors, so that they can agree or they disagree with the stated balances in that particular circular letter which auditor is using. So just one way to get a reliable auditor evidence. The next, number 8, assessing the reasonableness of the accounting estimates. Assessing the reasonableness of the accounting estimates. Is a financial statements, when some part of it inakuwa arrived by estimates. A very good example, it acquired a provision for bad and doubtful debts. Another one is maybe the accounting depreciation rate applied. Next, number 9, assessing the appropriateness. Of the accounting policies used. Assessing the appropriateness of the accounting policies used. Next point, performing final analytical review procedures. Performing final analytical review procedures. Here tumekuwa tukirepeat hapa, analytical review procedures is a part of the auditor stages and their reasoning procedures for unusual items. And next is ascertaining that proper books of accounts. Have been kept. Next, comparing the financial statements. With the accounting records. Comparing the financial statements with the accounting records. The number 13, reviewing subsequent events. Next one is evaluating the validity of the going concern assumption, evaluating the validity of the going concern assumption, evaluating the validity of the going concern assumption. Then we go to number 15, obtaining written management representation, obtaining written management representation, obtaining written management representation, obtaining written management representation. Next, writing and signing the audit report, writing and signing the audit report, writing and signing the auditor report, writing and signing the auditor report. So those are some of the work done by the auditor during the final audit process. Okay, let's go to the advantages of the final audit. Advantages of the final audit. Advantages of the final audit. So what are the benefits of the final audit? Point number 1, it facilitates completion. It facilitates completion. It facilitates completion. It facilitates completion and signing of the audit report. It facilitates completion and the signing of the audit report. It facilitates completion and signing of the auditor report. Number 2, it eliminates the tedious. It eliminates the tedious. It eliminates the tedious work associated with continuous audit. With continuous audit. With a continuous audit. Next point, more evidence is available. More evidence is available. More evidence is available. More evidence is available. To support the audit conclusion. To support the auditor conclusions. To support the auditor conclusions. To support the auditor conclusions. Next point. It is less disruptive. It is less disruptive and less costly. It is less disruptive and less costly. Unlike the continuous audit. 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 Next, it enables the company. It enables the company. It enables the company. It enables the company. It enables the company to publish the annual accounts. It enables the company to publish the annual accounts. Next point, it eliminates the chances of alteration of figures. It eliminates the chances of alteration of figures. It eliminates the chances of alteration of figures. It eliminates the chances of alteration of figures already audited. Already audited. And last one, it provides the basis for determination. It provides the basis for determination. It provides the basis for determination of the companies, corporate tax payable, corporate tax payable, corporate tax payable, corporate tax payable, corporate tax payable. Next point, it provides the basis. It provides the basis It provides the basis. It provides the basis for determination of the company's corporate tax payable. Let me repeat. It provides the basis for determination of the company's corporate tax payable. It provides a basis for determination of the company's corporate tax payable. Ama tumerudia.
We are repeating, Marim.
Unashangaa naona nani aandike chochote. Okay, so let's go to limitations. Sorry for that. Limitations. Point number 1, errors and frauds. Errors and frauds are detected at a very late stage. Errors and frauds are detected at a very later stage. Errors and frauds are detected at a very later stage. Number 2, due to constraints of time, the auditor may not be able to check a lot of entries, which may leave material misstatements, undetected. Okay, which may leave material misstatements undetected. These are material misstatements, the errors and fraud, which are material, which are very significant. Now maybe high value. Next point is that it may cause delay in the AGM. It may cause delay in the AGM. And filing of other returns. So that's all that you have on the final audit. So let's put this subtopic: factors influencing the timing of the audit. 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 So we have got the 3 audits: the continuous, the final, and interim. There are factors that will influence whether you go for the interim, go for the continuous, or the final audit. So which are these factors that will influence? So number 1 is the deadline fixed by the client. Number 1, the deadline fixed by the client. The deadline fixed by the client. The deadline fixed by the client. Like kama kuna very tight reporting deadlines, we shall go for the continuous audit. Kama kuna deadline for the interim audit, we shall go for the interim. So kama kuna deadline for the interim dividends, we shall go for the interim final, so interim audit. The number 2, the extent to which the client, can provide schedules and analysis. The schedule and analysis. The extent to which the client can provide this schedules and analysis. So Apple will you may choose either to go for continuous, interim, or final, depending on the availability or depending on how far they can go with regard to providing the necessary work schedules. The number 3, the extent to the client, the extent to the client, the extent to the client has a very strong systems. The extent to the client has a very strong systems. The extent to the client has a very strong systems. The extent to the client has a very strong systems. If the system is strong, we'll go for which audit? If the IEC is strong, tender for which audit? Continuous, I'm a final. Yes, a final. Come on, system weakness, continuous. Next, number 4, the nature of the audit, 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 i.e., is it the first time audit? Is it the first time audit? Is it the first time audit? Is it the first time audit or a repeated audit? Or a repeated audit? Or a repeated audit? So hapo inaonyesha kwamba audit akona experience, akona more experience, ndio ama akona less experience. So kama audit akona experience is a repeated audit, you may go for the final audit. Kama is the first time, you may go for the continuous audit. Next one is the type of the client's accounting systems. The type of the client's accounting systems. The type of the client's accounting systems, e.g. manual or computerized, e.g. manual or computerized, e.g. manual or computerized. The type of the client's accounting systems, e.g. manual or computerized, e.g. manual or computerized. So coming for manual, you go for which audit? Kama iko manual, you go for which one? The final one still. Alafu kama iko computerized, you go for continuous. If you go back, multiple department list where continuous audits applied, if you go back, utaona kwamba I didn't mention anything like that.
Yes.
We mentioned for point number 5. Number 5, to mention kwamba is where the where when auditing companies, the computerized accounting system. So coming for computerized, go for continuous. Coming for manual, go for the final. And next, the final financial year ends of other clients. 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 So those are some of the factors that will influence the timing of the audit. So before we go to the last one, which was operational audit, I want us to look at a question from the past paper. So you turn to May 2021. May 2021 on question number 1. 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 Question number 1A. Question number 1A. Question number 1A. I want to call tumeangalia question. Tulikuwa tushaangalia. Because nakumbuka tukifanya discussion ya stages of audit. Sawa, kama tuliangalia ni sawa. Did you check one on April? Or not yet? There's one on April 2021. Yeah, these are April 2022. Question number 1. April 2022. Question number 1. April 2022. Question number 1. Question number 1A. Question number 1A. April 2022, question number 1A. So let me read the question. Your firm has been engaged in auditing small entities for the last 5 years. In recent development, your firm has been appointed to conduct an audit on a large entity, which is the first assignment of such magnitude. You are required to undertake an interim audit and a final audit of the large entity. So required, 1, explain the objective of an external audit. Explain the objective of an external audit. Do we know the objective of an audit? Yes, you know, still. We said there are two main categories of objectives: the primary objective and the secondary objective, of which the primary objective is to enable an auditor to express an opinion on the financial statements to confirm whether they do reflect a true and fair view and they have been prepared in accordance with the identified financial reporting framework. So one of the objectives is to enable auditor to express an opinion on the financial statements. Yes, to enable auditor to express an opinion on the financial statements, to confirm whether they reflect a true and a fair view, and they've been prepared in accordance with the identified financial reporting framework. Financial reporting framework. They have been prepared in accordance with the identified financial reporting framework. Yes, to confirm whether they do reflect a true and fair view, and they have been prepared in accordance with the identified financial reporting framework. Then you can also add the secondary objectives, which you identified to be 2. Ya kwanza ilikuwa ni prevention and detection of errors and fraud. Prevention and detection of errors and fraud. As a secondary objective, prevention and detection of errors and fraud. Then maybe the last one, to advise the management of the improvement, to advise the management on the improvement of the entities' operations. To advise the management on the improvement of the entities' operations. To advise the management on the improvement of the entities' operations. So your question ilikuwa ni 2 marks, so maybe just 1 point was enough for you to earn the 2 marks. Roman 2, highlight 5 audit procedures you will undertake during the interim audit of the large entity. Is highlight 5 audit procedures you could undertake during the interim audit of the larger entity. So you can recall that in our notes, we are using the term work done, right? So work done is the same as the procedures, is the same as the assignment. Sometimes those are kama example work done, sometimes procedures, sometimes the assignments. We have those work done during the interim audit procedure. In our notes, like ascertain the accounting and the internal control system, recording and evaluating the system, analytical review procedures. So that's a question that we can comfortably tackle. Then Roman 3, describe 5 audit procedures you will undertake during the final audit of the large entity. So again, it's about the work done during the final audit. We have quite a number of points there, more than 14 points. All the work that can be done by the auditor, or the procedures, or the assignment that can be done by the auditor at the final audit. Na pia ukipenda kunaweza add even audit planning. We didn't mention that one. Audit planning is audit planning can also be one of the work done during the final audit. Audit planning, auditor planning, auditor planning, audit planning. So we have got audit planning. You're going to updating the auditor's knowledge of the systems, determining whether the systems have changed between the interim and the year end by interviewing the client's officers and carrying out a walkthrough tests. So we can now move on to the next question. Present 2 drawbacks of conducting interim audit. Present 2 drawbacks of conducting interim audit. So the drawbacks hapo ni kama the limitation or the disadvantages. So do we have the disadvantages or the drawbacks of conducting interim audit within our notes? Like it can be very expensive for a small business. It may be disruptive to the client entity, right? Errors and the frauds are detected at a much later stage compared to continuous audit. So that's a question we are good to tackle. So maybe just the last question. The last one, as we move on to the continuous audit. It's a small question. I cannot potea. Oh, these are September 2021. September 2021. September 2021. Question number 1C. September 2021. Question number 1C. September 2021. Question number 1C. So the question reads like this. Highlight 2 features of non-statutory audit. Highlight 2 features of non-statutory audit. Another term for non-statutory nature, private audit. Private audit. So can we identify the features of the private audit? Are we able to do so? Yes, ya kwanza itakuwa kama gani? Is not a legal requirement. It is a voluntary audit. It's not a legal requirement. It is a voluntary audit. It is not a legal requirement. It's a voluntary audit. Any other? Apart from that, any other? The liability of the auditor does not extend to the third parties, right? The liability of the auditor does not extend to third parties. The audit report is not a public utility document. 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 Then the last one, the scope of the work is determined between the client and the auditor. The scope of work is determined between the client and the auditor. The scope of work is determined between the client and the auditor. So you're doing well. Let's now move on to the 4th audit, which is a operational audit. Operational audit. Operational audit. The 4th one, operational audit. Operational audit. Operational audit. Ambayo pia inajulikana kama the value for money audit. Bracket, value for money audit. Value for money audit. Value for money audit. So in our classification, this audit fell under classification according to the audit approaches. Classification according to auditor approaches. The focus area is on the entity's operational activities which are being audited to find whether they are effective, are they efficient, and also economical, and to enable auditor to provide recommendation for their improvement. So basically it focuses on the activities of the entity. So the operations and the activities of the entity. So we may ask ourselves, which are these activities or which are these operations? Like production or the manufacturing operation activities. tuko na the finance activities, tuko na ICT activities. So anything, any task being performed within an entity falls as, so it's a type of an activity. So let's write the following that this is a systematic review. 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 This is a systematic review of an entity's operations. Of an entity's operations. Of an entity's operations and activities. And activities to be able to assess, 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 to be able to assess its performance, its performance, its performance, its performance, and to identify opportunities, and to identify opportunities, and to identify opportunities for improvement, and to identify opportunities for improvement, and to identify opportunities for improvement. Full stop. It is a partial audit. It is a partial audit. It is a partial audit. It's a partial audit that may be carried out, that may be carried out, that may be carried out, that may be carried out by either internal, by either internal, by either internal, external, 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 or government auditors, or government auditors, or government auditors. On behalf of the appointing authority, on behalf of the appointing authority, on behalf of the appointing authority, on behalf of the appointing authority. The main objective of such an audit includes, the main objective of such an audit include, 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 number one, establishing whether the resources of the organization, the resources of the organization, the resources of the organization are being utilized, are being utilized, are being utilized economically, are being utilized economically, are being utilized economically, i.e., the entity is driving. The entity is driving. The entity is driving maximum output, maximum output, maximum output from any given level, from any given level, from any given level of input of resources, of input of resources, of input of resources. The number two, establishing whether there is efficient utilization, there is efficient utilization, there is efficient utilization of resources, of resources, of resources by the entity, by the entity, by the entity, by the entity, i.e., whether there is minimal wastages, whether there is minimal wastages, whether there is minimal wastages of resources, during the entity's operations, okay? Whether there is a minimal wastages of resources, whether there is a minimal wastages of resources during the entity's operations. During the entity's operations. Number 3, establishing whether the entity is operating effectively, is operating effectively, i.e., whether during the operations, they strive to obtain the stated objectives. They strive to obtain the stated objectives. And for the advantages. Number 1, it may result in the utilization of resources, Number 2, it may be useful in highlighting areas of the operations which may require urgent attention, by the management. And next, number 3, it may reveal irregularities affecting the entity's operations. It may reveal irregularities affecting the entity's operations. Let's go to the disadvantages. Disadvantages. 1, auditors may lack proper understanding. Auditors may lack proper understanding of the nature of the entity's operations. Auditors may lack proper understanding of the nature of the entity's operations. Number 2, the client staff may not be cooperative. The client staff may not be cooperative enough. To provide sufficient information to the auditors. to the auditors. To the auditors. Number 3, this is a partial audit. This is a partial audit. This is a partial audit. This is a partial audit, and therefore may not result, and therefore may not result, and therefore may not result into conclusive decision, into conclusive decision, into conclusive decision for the benefit of the users, for the benefit of the users, for the benefit of the users of the information, of the information, of the information. Number 4, such audits may not be useful. Such audits may not be useful. Such audits may not be useful for the entities, for the entities, for the entities that are dealing, that are dealing in dynamic environments, in dynamic environments, in dynamic environments, i.e. situation where operations, i.e. situations where operations, situations where operations may be required, to keep changing, from time to time, from time to time. Critical the users of audited financial statements, users of the audited financial statements, users of the audited financial statements, users of the audited financial statements. So we're just going to list these users, because I believe that you know what's the areas of interest with regard to information they are seeking from the audited financial statements. However, still, they just want to make a good decision by relying on a credible information from the auditors. So number 1, took on existing shareholders, existing shareholders, existing shareholders, existing shareholders. Is not their interest, is about dividends, the return on their investment. And that's what they're looking for, the audited financial statement, if that information can be guaranteed. Number 2, potential investors. Potential investors are potential investors. Potential investors. So potential investors, they could be looking for investing opportunities in the company, but there's so much interest in the company's audited financial performance. Number 3, lenders, like banks and financial institutions, like the banks and financial institutions, banks and financial institutions. So that's how their main interest upon the liquidity position of the business. Is that business liquid? Do they have a sound cash reserves for the revenues? Number 4, trade creditors and suppliers. Trade creditors and suppliers. Trade creditors and suppliers. Trade creditors and suppliers. So I'm going to provide some of the factors and inputs. They are so much interested on the continued relationship with the business, and also whether the business will be in a position to pay their money, to repay their money whenever it's due. Next, you have our customers. Number 5, customers. Customers. Yes, as a customers, they're the ones who enjoy the company's products and the services. They want to have that continuity in enjoying the company's products and services. So they're also interested in the audit financial statements just to get to know whether the company is sound and it will be still in a position to offer those products and services. And next we have the directors. Directors. So directors also are so much interested on the audit financial statements because they have a responsibility of managing the company. So they want to check whether they are able to fulfill some of the statutory obligations. Did they comply with some of the statutory requirements? And next we have got employees. So as employees they offer their services in return for the payment of wages and salaries and maybe other benefits of employment. They want that stability of tenure. They want that long-term contract to be sustained by the entity. At the same time, they want to get to know whether the company will be in a position to pay them those salaries and other benefits whenever they become due. And next, we have government and its agencies. Government and its agencies. Governments and its agencies, e.g. KRA, government and its agency, e.g. KRA. So government normally come up with the policies. These are policies that determine how resources are equitably distributed in the country. So they're also interested in the audit financial statements to get that sound information. So it's that good information for good decision making. Next, we have consultants and other experts. Consultants and other experts. Consultants and other experts. Consultants and other experts. So the main input to give advice or to offer the advisory and consultancy services. For that case, they want a credible information from the audited financial statements. Next, we have the general public. The general public. The general public. The general public. So those are the members of the public, arm of the society. They're just interested on the corporate social responsibility needs if they're being able to be provided by the entity. And that's why they may be also interested with the audited financial statements. Sasa tukishafanya hiyo, nataka tuende kwa advantages of audit. Advantages of an audit. Advantages of an audit. Advantages of an audit. So audit is very useful to various forms of the businesses, where tuko na the sole proprietorship, tuko na partnership, tuko na company, tuko na trust, tuko na cooperative societies. So audit is quite very useful to all these particular entities. Like in the case of the partnership, kama kuna disputes, one way of resolving that disputes is through the audited financial statements. So the audited financial statements enables idea the partners to resolve some of the disputes. Tukikuja kwa case of maybe the government end, the government wants to get to know the tax position, the tax liability position of the entity. In that case, they may demand for audited financial statements, which will be the basis for computing the tax liability. So which are some of the advantages of an audit. So one, minimization of errors and fraud. 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 Two, it facilitates the filing of tax returns. It facilitates the filing of tax returns. It facilitates the filing of tax returns. Next, it leads to an improvement It leads to an improvement on the entity's accounting system. It leads to an improvement on the entity's accounting system. It leads to an improvement on the entity's accounting system and internal control system. And internal control system. And internal control system. And internal control system. Next point, auditors may provide a useful advice. Auditors may provide a useful advice to the managers. Auditors may provide a useful advice to the managers. Auditors may provide a useful advice to the managers to assist in the improvement of the entity's operations. To assist in the improvement of the entity's operations. To assist in the improvement of the entity's operations. And next, it provides a credible information. It provides a credible information to the various stakeholders. It provides a credible information to the various stakeholders. It provides a credible information to the various stakeholders to assist in decision making. 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 Next, it makes directors to be satisfied. It makes directors to be satisfied. It makes directors to be satisfied. It makes directors to be satisfied that they complied. That they complied with their statutory obligations. 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 Next, it can be used as a tool. It can be used as a tool to access funding from the banks. It can be used as a tool to access funding from the bank. It can be used as a tool to access funding from the bank. It can be used as a tool to access funding from the bank. So class, I want us to go lastly to what you call the inherent limitations of an audit. 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 So as the term inherent, it means unavoidable. The term inherent means unavoidable. Unavoidable. So even audits, even if an audit has been done, but it has some limitations. And those limitations in nature inherent. Like for example, there's a very good system in place, a very effective system in place, and still the material misstatements may occur in the financial statements. So which are some of the inherent limitations of an audit? What we refer to as the inherent limitations of an audit. So one, before that one, before you put just one, okay, just say number one is that I think these are inherent limitations. We explain them. Wakati kwa tunaongea about reasonable assurance and absolute assurance. Some reasons why absolute assurance is not possible. Yes. Like one, the basis on what, so the basis for which an audit is normally done, the test basis, the sampling technique. We don't audit every item. Yes, select a few, then you subject them to auditing test and procedures. Alafu ingine tukasema report the weaknesses in the internal control systems. Ingine tukasema possibility of what? Pollution. The parties who commit a fraud or irregularity, they may come together and consider that fraud and become so difficult to detect it. Alafu ingine pia ni judgment, subjective process of arriving to an audit conclusion. So number one is that the fact that audits involve, the fact that audit involves, the fact that audits involves, the fact that audits involves judgments, some of which may be subjective, 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 some of which may be subjective. Number two, the fact that auditors may use, the fact that auditors may use, the fact that auditors may use, the fact that auditors may use techniques such as sampling, which means that they may not check, every item in the account, every item in the account, every item in the account, every item in the account. Number three, the fact that an audit, the fact that an audit may entail assessment of risks, which may not be accurate, which may not be accurate, as well as assessing accounting estimates, made by the preparers of the account, And next, number four, there is a possibility that the client staff may collude, in an attempt to hide information from auditors, resulting from wrong audit judgments, Then the last one, inherent limitation in the internal control system, inherent limitations in the internal control system, that should be number 5. Inherent limitations in the internal control systems. Inherent limitations in the internal control systems. Inherent limitations in the internal control systems, which may leave some material misstatements undetected. which may leave some material misstatements undetected. Which may leave some material misstatements undetected. So that's all on the inherent limitations of an audit. So class that now marks the end of our topic 1 on the nature and the purpose of an audit. So there are subtopics which we have covered there, like the nature and objectives of an audit. Here to define. You have the audit objectives there. Development of an audit, the differences between an early audit and modern audit. You have to define. The users of the audited financial statements, at least now we know them, and we can be also able to identify areas of interest. Alafu ingine ni the features of audits, hiyo tumefanya kwa hizo types and classification of audit. Distinction between auditing and accounting, we've also done that. We're able to differentiate accounting and auditing. The types and classification of audits, we'll cover that area. Situations when different audits are performed and focusing on the interim, continuous, final and operational audit. Also cover that. Advantages and disadvantages of various types of audits. Nature of work done for different audits to earlier. Then the last one, inherent limitations of an audit. So we're now done with the topic 1. So we're moving to the topic 2. Topic 2 is assurance and non-assurance engagements. Topic 2, assurance and non-assurance engagements. Topic 2, assurance and non-assurance engagements. Topic 2, assurance and non-assurance engagements. Assurance and non-assurance engagements. So what happens is that as an auditor, you can be engaged to offer services. So the services are divided into 2 areas. What you call the assurance services, then the non-assurance services. So if you have to offer the assurance services, there's the assurance engagement. If you have to offer the non-assurance services, that's the non-assurance engagement. So let's take some 3 minutes break. Allow to move into another discussion on that topic 2. So let's continue this second topic, assurance and non-assurance engagements. So we shall begin by the definition of the term assurance engagement. 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 Let's understand what is this assurance engagement, but just kind of a story. They say kwamba tuko na seller, a car dealer. Then we have a buyer wants to buy a car. You have a buyer who wants to buy a car. So the subject matter is a car. Is a car. for this buyer to make a purchase decision, whether to buy the car from the seller, this seller upper, or not to buy it from the seller, he or she requires what we call information. He or she requires what we call information for them to make a decision. Anytime you want to make a decision, call for information. So nowadays, we go for what you call solutions. We want solutions for their problems. But before you arrive to the solution, you still need an information. This information, it has got some essential characteristics. Like one, that information needs to be reliable. You need a reliable information, one that you can depend on. The other one is that information, for it to be good for decision making, it ought to be relevant. You also need a relevant information. You also need that information to come at the right time. So the information must also be timely. The information must also be timely. Another thing is that you're going to incur maybe expenses to get access to that particular information. So the good information needs to be economical and needs to be economical. So the same kind of arrangement whereby to one of the car dealer and the buyer, one party has got more information than the other. What we call the information asymmetry. So the seller has got more information. There is imbalance in the information possession hour, where the seller understands his car condition better as compared to the buyer. And also the seller understands whether that value the buyer is requesting for or is offering to the buyer is a factual or is maybe at a fair market value. The buyer in this case is not an expert. He may not now be able to understand whether this seller, the kind of information being provided is a factual. So the seller will have to engage the services of an expert. The seller will have to engage the services of an expert to reduce the consequences of end up making a wrong purchase decision. And this expert somebody is in this business of a car dealing and a mechanic from a reputable firm, not just any other mechanic, but a reputable firm or maybe from a reputable business, whom the buyer will now engage to come and review this particular car based on a certain maybe criteria and give back information to, give a report back to the buyer about his or her findings pertaining to the car conditions or the car status, if it serves the buyer, and the buyer will be able to get the value for the money. So this report the most important part upon a conclusion, either if this person can proceed with that purchase or not proceed with that purchase decision. So the same arrangement also happens when it comes to assurance engagement. So when you use the word assurance, just to enhance the degree of confidence of another party, and this party are the intended user of the audited financial statements. So in this case, we have got parties, the three of them. Look on the seller or the dealer. So we are symbolize the directors or the managers, or whom we call the responsible party. The responsible party. The responsible party is the ones who prepare the subject matter. Is the one who will now be availing for it, like in this case about the dealer, will be availing the car. Then we have the buyer upper. The buyer upper symbolizes the users now, the intended users of the information. Then we have another party who is a mechanic, who is now who? The auditor. He is now the auditor, about the practitioner, who will now come and examine the subject matter against certain criteria. So what we've mentioned up are some of the elements which appears in all the assurance engagement. You do see that an assurance engagement, all assurance engagement has got the five basic elements, All assurance engagement has got the five basic elements, We use a mnemonic word to at least memorize these particular five basic elements. We do say all assurance engagement should contain what we call the crest. Should contain what you call the crest. So this C upper, the one upper number C stands for what we call the suitable criteria. The suitable criteria. A suitable criteria. A suitable criteria. So a suitable criteria, just a criteria, is a benchmark or a standard. It's just a benchmark or a standard against which the subject matter is normally evaluated. Like if the subject matter which in our case is a car, but in the audit of financial statements, the subject matter is the financial statements. Then there is a criteria for preparing the financial statements, which is the identified financial reporting framework. So we now check whether that criteria was appropriate. Now, suitable criteria, people are what to call some characteristics, which you need to check. There's some characteristics that you also need to check whether that suitable criteria are met. Like one, is it reliable? The reliability. Reliability. You also have to check the relevant of that criteria. You must also check the understandability of that particular criteria. Understandability of that particular criteria. How neutral? Is it unbiased in its presentation and the disclosure of the subject matter? So you also check the neutrality of the subject matter. The number two are upper is what we call the assurance report. Number two is what we call assurance report. So all engagement, so all assurance engagement, equal now the report. Report enables now the practitioner, among the auditor, among the accountant, to arrive to their conclusion or to express an opinion. And as they express that opinion, they're giving what we call the level of assurance. Like one, they're confirming that the subject matter does reflect a true and fair view, or the subject matter has been presented fairly, free from material misstatements under the assurance report. Then E stands for what we call evidence. E is evidence under the engagement process. So you as an accountant, under the practitioner, you need to plan your work and perform this engagement to obtain sufficient appropriate evidence. It's this particular evidence which will enable you to arrive to a particular conclusion. Then number four, this S, S stands what we call the subject matter. S stands for what we call the subject matter. What's being measured or evaluated? Like in our case, the subject matter was a car. In the case of the audit, the subject matter about the financial statements. That's what's being measured and prepared by the responsible party. Then the last one, T. T stands for what we call the three-party relationship. Three-party relationship. All assurance engagements has what we call the three-party relationship. The three-party relationship. So who are these three parties? Already I've mentioned the mapper. One, responsible party. Responsible party. So responsible party is the one who prepare the subject matter, or the one who prepare the financial statements in this case. The other one, the practitioner. So the practitioner is the one who is now being engaged to come and examine that subject matter, whether it has been prepared based on the appropriate criteria. Then the last one, the intended users, the intended user. Ones will now be using the audited financial statements report. So all assurance engagement, we have the 5 basic elements. And you want to see them appear in our definition for the term assurance engagement. So let's define the term assurance engagement. A topic when Subanga, most of the students to understand what are these assurance and non-assurance engagement. And as we continue, also other concepts are going to come up. And that's what unakuwa makes them. In fact, wengine wanamalizanga this course without even understanding all these easy terms about. But now that we're in this class, you're going to understand them clearly. So let's define the term assurance engagement. So what's assurance engagements? How do we define this term? So an assurance engagement is where a practitioner, an assurance engagement is where a practitioner is engaged to evaluate or measure a given subject matter, that was a responsibility that was a responsibility of another party, against a suitable criterion, and express an opinion, meant to provide the intended user, with a level of assurance, regarding the compliance of the subject matter, with the identified criteria, So that's the definition for the term assurance engagement. So you can see those elements appear there. Ya kwanza hapo tuko na fractionnaire, which is among the three-party relationship. The other one is subject matter, what's being measured or evaluated. The other one is the responsible party. Alafu tuko na suitable criteria. Then kuna opinion, part of the report. And let's go to the elements of assurance engagement. Elements of assurance engagement. All assurance engagement has the five basic elements. All assurance engagement has the five basic elements. I.e., I.e. crest. Just to be able to recall, I.e. crest, which is a mnemonic we use, so crest. So number one, suitable criteria. Number one, suitable criteria. So take this criteria as the main one there. They see the criteria. The R, number two, assurance report. So we take R for the report. Then E, evidence. E for the evidence. Then S, subject matter. Then the last one, the three-party relationship. Then you can now put this one down. I will have the functional who examine what is examining is a subject matter. Who prepare the subject matter? Responsible party. It is a suitable criteria. Suitable criteria. Then give a report. Reports meant for intended users. So the auditor will examine the subject matter, which was prepared by the responsible party, and based on the suitable criteria, then give a report to the intended user. The assurance report to the intended user. There's something to be served for. All these are now being the engagement process. Engagement process. What's happening in the engagement process? Let's start with the first one, suitable criteria. Suitable criteria. Number one, suitable criteria. Suitable criteria. That's the element number one, suitable criteria. Suitable criteria. This is the standard. This is the standard. This is the standard or benchmark. This is the standard or benchmark. This is the standard or benchmark or threshold or threshold or threshold against which the subject matter is measured or evaluated, is measured or evaluated, is measured or evaluated. E.g. in an audit, e.g. in an audit, e.g. in an audit, the criteria is, e.g. in an audit, the criteria is the financial reporting framework. 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 The financial reporting framework consisting of IFRS, IS, GAPS, Company Act, legislative requirements, etc. Legislative requirements, etc. That affects financial reporting. That affects financial reporting. That affects financial reporting. That affects financial reporting. Let's go to characteristics of a suitable criteria. Characteristics of a suitable criterion. Characteristics of a suitable criterion. So one is relevance. One is relevance. I.e. the criteria should be understandable. The criteria should be understandable by the users. By the users of the subject matter. The number two, understandable. Understandable. I.e. easy and simple to comprehend. Easy and simple to comprehend. Easy and simple to comprehend. And next, reliability. Reliability. I.e. being credible, truthful, being credible, truthful, trustworthy, etc. Number four, completeness, i.e. having all the complete details, having all the complete details. And next, neutrality, i.e. free from being biased, I go to number two, assurance report. Number two, assurance report. This provides the basis. Where the rationale expresses an opinion. Whether or not the subject matter, conforms to the identified criteria. Conforms to the identified criteria. Pinter. That's what system. You are moving now. You're moving on quite well. Professor. Imetosha leo sio. That's enough for today. Sasa tukomea hapo. alafu Wednesday we shall pick from there. So sawa. How about you next? Let's meet on Wednesday.